winners. Look, welcome to Terry's Tips, guys. Get a notebook, get a pen, because today I'm going to talk about how to get a business line of credit. Specifically, the differences, guys, between a secured business line of credit and an unsecured line of credit. And also when they ask you to be a PG, what does that really mean? Because you guys are getting confused here. And guys, it's beautiful outside, so I'm like outside on my deck because I just felt like doing it out here. I just took off my shoes, OMG. So guys, in this video specifically, I'm going to talk about some of the differences, what you need to qualify, what they're looking for, some of the pros and cons. Then I'll actually give you some examples of some lenders that give business lines of credit. And for all my newbies, welcome, guys. My name is Terry. This channel is about wealth building, legacy, specifically how to leverage your personal and business credit to have a different lifestyle, to have an inheritance, to have passive income, to change your legacy, guys. I upload brand new videos every Tuesday and Thursday. So I would love for y'all to subscribe, like, share, comment, guys, and I'll do my nugget at the end. So guys, first let's talk about it. A business line of credit. You know, what is it? It's revolving credit, guys. So just like credit cards is revolving credit, charge cards is revolving credit, and business lines of credit is hands down the most flexible, the most money, and the thing that you all want the most, okay? And what a business line of credit means, it can be $5,000, $10,000, $50,000, $100,000, $200,000, guys. Business lines of credit can go from very small, like $1,000, all the way up to like $200,000, $300,000, $500,000. The reason why it's different, guys, than a credit card or than like a charge card is because with this business line of credit, let's say they give you $50,000, okay? That $50,000 is available to you. You do not pay any interest on it, guys, until you actually draw from it. The money will go into your business checking account, which is why you need a business checking account. And once you draw from that $50,000 line of credit, that's when you start making payments back. That's when you start, having interest. Then mind you, as you start to pay it back, guys, just like a charge card, just like a business credit card, it replenishes, right? You can use it all over again. Guys, when you're strategic about one business line of credit, you can change your whole entire life. Because if you use it for things that are income producing, to grow, to get passive income, to grow your inventory, grow your business, guys, it can be a game changer because you will always have the money to pay it back. You're building a relationship, guys. Look, follow these nuggets, okay? You'll have building a relationship with the lender. And one of the pros, guys, nugget right here of business credit is that it grows very quickly. So they give you $5,000, $10,000. You use it and pay it back responsibly. It's like 90 days. They're like, here's 20,000 in 90 days. They're like, here's 40,000 in like 90 days. They're like, here's 60,000. Okay, guys. So if you do get approved for a business line of credit and it's a small amount, don't be like, oh, I don't need that, guys. Take the money, use it responsibly, and build that relationship. And then more importantly, if it's a lender, nugget here, that reports to your business credit, other lenders will see that and that will do what? Help you qualify for more money. Now, what can you use a business line of credit for? Anything. Look, y'all know I'm extra. Anything, guys. So this is where it can be used for inventory. It can be used for rent. It can be used for mortgage. It can be used for cars. It can be used for payroll, for marketing, for staff, for like inventory, for equipment, for laptops, for cell phones. Guys, one of the reasons why so many people want a business line of credit is because of the flexibility. It's not really like you have to use it for a specific item. Like if you get a business auto loan, you need to buy a car. If you get a business mortgage, you need to buy a property. If you get a $50,000 business line of credit, you can use it for whatever you want. Got it good, guys? All right, so let's talk about a secured business line of credit. So when you hear about a secured line of credit, guys, all that means is that you're putting up collateral. You, as the business owner, are putting up collateral to be approved for the business line of credit. Now, how does that help you? Because it's lower risk to the lender. You follow me? Pros and cons, right? It's because you have some skin in the game. So normally if you have to put up collateral, something that you may not have qualified for, and I'm sorry about the lighting, guys, because I decided to do this video outside. Maybe it wasn't the best idea, but y'all know I'm not going to re-record this, okay? So anyway, right? And so this means that you're putting up some collateral. You have some skin in the game. That means the lender, you look lower risk than lender, so they'll actually approve you. Now, what are some collateral items? Because some of you guys actually do have collateral, but you've never kind of explored this option. This may help you get approved. This is even stuff that you guys can put on your application. So I wrote down some examples. So some examples are like, if you have real estate, personal or business real estate, vehicles, if you have inventory, guys, there's inventory financing, cash, if you have cash on hand. Say you have $50,000 in the bank, but you want a business line of credit and you don't want to use your own liquid capital. You can be like, hey, I have some money in the bank, but I'm looking to secure a business line of credit. Guys, that's putting up some collateral. They're not going to take that money, but in your contract, it's like almost like a guarantee, okay? Also, financial securities like stocks, bonds, 401k. Guys, there's people in my 680 program who thought they didn't qualify for anything, especially as brand new business owners. Follow me, guys, but they had 401k, and we do have lenders that have like 401k financing. That's considered collateral, okay? Even like I said, like equipment, invoices, 401k, stocks, bonds. So I want you guys to be thinking about, what do you currently have that could be used as collateral, especially if you are a newer business owner. You've been trying to grow your business, you keep on getting denied, and maybe you're not strong in some of these other areas. You may have something working for you that you didn't even consider. So pros are that you look lower risk to the lender. Pros that you may have a better interest rate. Pros that they might give you a higher amount. Pros that they may approve you with collateral when they would have denied you without collateral. Now, some of the cons are that you're putting up collateral. Come on, somebody. But if you're going to pay the item back, then you should not be worried. And everybody on this channel, everybody connected to me, we're using the credit to grow, to get legacy, to put into income producing assets. So we intend to pay it back. Come on, somebody, okay? Now, the unsecured line of credit, it is higher risk to the lenders, right? Because this is where they're just giving you this money, $50,000, and if you don't pay it back, if you default, then they are out of their money, right? So for you, the business owner, the pros is that you get this line of credit, $10,000, $20,000, $50,000, $100,000, and you did not put up anything, right? That's what you guys want. However, to the bank, even if they approve you, sometimes they will approve you at a lower amount if it's unsecured. Sometimes they will give you a higher interest rate or more fees because it's higher risk to them. Sometimes they'll even give you a shorter repayment term, right? So maybe they'll say, well, we'll give you $50,000, but you have 6 months or 12 months or 18 months to pay it back. Whereas though with collateral or even like a traditional loan, they may have said you have 24, 36, 48 months to pay it back, right? So they will give you a shorter repayment term, which does what? It makes your payment higher. That's why I always teach you guys to be smart about what you're using the money for and put it into things that are income producing, going to create revenue for you. And then another thing, they may ask you to be a PG. So let me explain that. PG, personal guarantee, personal guarantor, however you want to say it, okay? A PG. Some of you guys are like, well, hey, they asked me to be a PG, but I thought you said no hard inquiry. It's two completely separate things, okay? Two completely separate things. So a PG, what that means is that the lender is saying, we will give you the credit. However, because you are a new business owner, maybe because your business credit is not strong enough, maybe because your business profile is not strong enough, maybe because you don't have enough revenue, maybe because your personal scores are not strong enough, they will say, we'll give you the money, but you need to be a PG. Now, what does that really mean? All it means is that you, the business owner, it's almost like you're a co-signer for the amount, meaning that if your business does not pay back the business line of credit, then you, the business owner, are liable. Now, what's the whole reason why we build business credit, guys, is to separate the two, right? Over here, you have your personal name, your personal social, and the credit bureaus are TransUnion, Equifax, and Experian. Over here, you have your business name, your business EIN, and your business DUNS, and you have Dun & Bradstreet, Business Experian, and Business Equifax. Completely separate. However, in the beginning, when you are new, when you're building lender relationships, if you have no collateral, if you have low credit, they may ask you to be a PG. It's okay. Then you're being a PG for it. You're paying it back on time. Then the next time they may give you more money or make you not be a PG. So, but guys, don't think that you're going to be a brand new business owner, no revenue, low or no personal or business credit, and not be asked to be a PG, especially for a business, an unsecured business line of credit. So there's trade-offs. The biggest thing I want you guys to take away is, guys, don't be scared of that. A lot of you are like, no, it's just you and your business. So you essentially are your business. So they're asking you to co-sign. You are your whole business. That shouldn't be such a scary concept. That means you're getting the money, you're putting it into something income producing, you're paying it back. And then now the next time they're going to give you more money, lower rates, longer, on repayment terms, and tell you don't need to be a PG anymore. So guys, you gotta crawl before you walk, before you run, before you sprint. Your goal is to get your foot in the door, right? And get the money, use it responsibly, and then now as you grow, come on somebody, as you build that lender relationship, then you'll have better terms, more money, grow faster. Got it good, guys. And so let me talk about the different things you need to qualify. There's really 5 main areas. And guys, right here, like I think today is June 28th. Guys, June 30th, 2022, I'm having a business credit booster workshop. Literally, I'm going to break it down. You have never, ever seen a workshop like this from me before. And I'm going to break down specifically what you need to get to a 700 plus credit score and to secure within $50,000 within 90 days or less, how to build your business profiles. I can talk today quickly. So I'll put the link in the description, guys. Register. I'm doing it one time, one and done. Okay. So June 30th, 7:30 p.m. limited availability. We're about to close out registration. So register right now. Because if you want me to really walk you through the process, it's an actual workshop. Come with your notebook, come with your pen. I have some slides for you and everything, guys. It's not going to be just me talking. I'm going to really be teaching on this thing. Okay. So make sure you guys register. That way I can show you how to qualify. Now I'm giving you the terms. I'm giving you what they're looking for. But if you're like, okay, well, I don't have that, I need help getting there, I got you covered. Okay, so there's really 5 areas, guys, that the lenders are looking for to qualify you for an unsecured or secured business line of credit. The first thing is time in business. This is why I always tell you, no matter what, just incorporate your business. Even if you haven't launched yet, even if you don't have your website, you don't have your logo, you don't know what you're going to do, just incorporate. Everything you guys do is a business. If you have a podcast, if you babysit, if you do anything, if you do hair, do nails, you're a consultant, like anything you guys do is a business now at this point. So go ahead and just incorporate. Many business lines of credit want you to be in business like a year to 2 years. However, I talk about what all the time? Fintech companies. I talk about what all the time? The 3 C's: cash, collateral, and credit, right? And so this is where I'm going to outline this on the workshop also, but there are ways to get around this, and sometimes changing the lender, come on, somebody, will give you a different result. Okay, so there are lenders that will fund you at like 6 months in business, sometimes even sooner. You have to know where to go to get the money, and you have to also play to your strengths, right? If you have high revenue and low credit, that's a certain kind of lender. Understand the approval criteria, high level strategy to actually get you the results that you want. The next thing they're looking at is revenue. So a lot of times they do want you to have between like 50,000 and 100,000, but that is not for everybody, because some of you guys are like, well, I'm a brand new business, I don't have any revenue. Well, then that's why, come on somebody, your workaround is having high personal credit or high business credit to get around the fact that you don't have revenue. What you can't have, I'm trying to help somebody, I'm freeing somebody on this video. You can't have bad credit, no business credit, and no revenue, and then ask a lender to give you $50,000 unsecured. Would you give yourself $50,000 unsecured? I'm here to help you, but I want you guys to understand the mindset, right? So if you don't have one thing, then you build in the other area. I'm here to help you, because this is how people, when they follow a proven system, 90 days or less, $50,000 plus. Look, got all the receipts in the world, okay? So revenue. Another thing is credit scores, right? Number 3 is going to be your personal and or your business credit scores. All of you should aim to have a 680 and above. On the workshop, I'm going to set 700 as a benchmark and tell you what you need to do on your credit to have a 700 plus credit score. And I'm going to tell you what you need to do on your credit to have an 80 plus Paydex, 80 plus IntelliScore. Okay, guys? And then the next thing, number 4, is collateral, right? So if you have collateral to put up, then that will help you get approved. And then after that is also the type of business, guys. The type of business and what you're using the money for. So don't be like, I want the money just in case. Don't be like, I'm about to go bankrupt, I need the money. No, guys, businesses want to lend to other like entities that are thriving. So you want, you want the money to hire staff. You want the money to expand. You want the money to grow, open up a new location. You follow me? You want the money for your marketing team. So think about a good use. And for the business type, if you are a real estate investor, that's 1,000% okay. I'm a real estate investor. I help a lot of real estate investors. But what you're not saying is, I need $50,000 to put as a down payment on my flip, which is super high risk to the lenders. No, guys, you're saying, you're in property management, which you are because you're managing your projects, and you need the money for like expansion. You need money to pay for a project. You need money to, pay, your contractors or for your staff. There's ways to be strategic about wording what you are, the type of business you are, and also, oh my God, like the wind. Sorry, y'all. What you are, and also what you're going to use the actual money for. Okay, so be smart right there. And then the last thing, guys, I'm sorry, maybe doing this outside wasn't like the best idea, but I'm not stopping now. And the last thing is where to get the money. So guys, I just did a whole video on deck. I talk about the fintech companies a lot. Rok Financial is a business credit super broker, and we have an inside contact there for Credit Leverage Lifestyle. I'll put the link in the description, because how does that help you? They're tied to 70 plus lenders, guys. So this is where they'll have a conversation with you, discuss your needs, and then help you kind of shift through who you qualify for and who you don't. So on deck, Rok Financial, Cabbage, Blue Vine, Fundbox. Those are some of the fintech companies that are really, really well known. But guys, also the SBA has lines of credit, and then also the traditional banks like Wells Fargo has a line of credit. Bank of America has a line of credit. Even Capital One, even though they're known for credit cards, Capital One has a line of credit. Amazon has what they call a business line of credit, but you have like 55 days or so to pay it back, depending on what you get approved for. And guys, who else? Like even like the smaller banks and the regional banks like KeyBank have business lines of credit. How does that help you? Because I just did a whole series on this called Walk With Me. And one of them I said where to get the money. And I explained the 3 types of lenders: fintech companies, commercial traditional banks, and credit unions, and then SBA. That's just what I outlined. Rok Financial, On Deck, all of those guys, those are fintech companies. Then the SBA, where you need more documentation, but they have better terms, and then the traditional banks. So guys, I will, depending on when you're watching this video, right, because I have to go do a Zoom, and then I'm going to go do a Walk With Me series too. I have something to talk to you guys about. I'll go back and put some of the companies in the description. So recap. In this video, I told you how to get a business line of credit. I explained secured, unsecured, PG, what you can use as collateral, and the 5 areas of work they're looking at. And then I told you, I'll give you some examples of some of the companies that give them. I'll go back in and put that in the description. And guys, for my nugget, I just want to say you have to do the work. I don't know what else. You have to do the work. Like guys, if you buy a treadmill and your goal is to lose weight, you buy the treadmill, you set the treadmill up, you put it in your den or whatever, then you never ever walk on it. Every single day you're eating pizza and ice cream and soda. You can't say the treadmill didn't work. No, you didn't work. Guys, the same thing. Once I outline everything on this workshop, if you don't have the results, I hate to say it, but the only person you have to hold accountable is you. So we are in June, okay? We're halfway through 2022. My goal is to see you have the results you desire, that you deserve, that you want. So as I break it all down for you guys, then you go through and you execute, and then tag me in your results so I can congratulate you. Amen?